Hello. Ever since we started Seven Investment Management, we've been developing a range of facilities and services, frankly, as required and asked for by those professional financial planners we work with and their clients. And that's moved all the way from investments, through platforms, through deposits, and now to the next stage. Really, I suppose the most logical extension now to actually moving in towards providing loan facilities for clients through their planners. Tom, what exactly do we mean by this sort of loan service?
The lending in our context here is taking somebody's portfolio of securities and using that as collateral to lend against. And the reason that we're doing that is, quite frankly, our customers have asked for it.
But is that just as an individual or as a family? How is that structured?
Could be any combination of family members or units or tax wrappers, except, of course, for a pension where the rules don't allow it.
So in terms of collateral, then, there are some quite clear constrictions here.
Yeah, as with lending throughout the market, so nothing different here at 7IM than what you'll find anywhere.
Okay, but 7IM isn't a bank. How are we actually structuring this?
Right now, 7IM has its customer securities held at a subsidiary of the Bank of New York. And so since Bank of New York already has the collateral, it's quite easy for them to step in and to provide the lending capability.
Okay, so what sort of structure and cost would you think this might have?
The cost right now is 3.5% over base rate, so cost today to a customer would be 4%, which is quite competitive out there in the world.
Okay, so what's the benefit to the underlying client here?
Well, a customer very often will have a need for cash, and it might be a short-term need or a medium-term need. And these loans have no maturity period, so they can carry on as long as the customer would like them to carry on.
So in theory, it could be just a few months or a few years, quite easily.
Yep, either is fine. And the reason that they may do that is that the customer may find that they would rather access the money through a loan than sell securities and perhaps incur capital gains tax when they really could do without that.
So without sort of interfering with the financial plan overall, therefore.
Yeah, and that just gives the financial planner that you referred to before the ability to integrate another tool into the planning arsenal that they have.
So this is a crucial bit, therefore. Where can this really help for the financial planner? Is it in terms of winning new business or defending themselves or what?
Very often the customers come from private banks, and we're seeing more and more customers come to Seven Investment Management through the financial planners that we work with, who are private banking customers. And what we have found at the private banks recently, given the enormous amount of press coverage that banks in general have had over the last few years, is that they may not have had the level of service that they want. They may have had charging, which is a bit high. The investment management capabilities are not always distinguished, and yet they're held there because the bank provides them with a loan. We can now answer that question for the financial planner and their client.
Okay, so it's all around building that rounded service for the client then. So I think what is quite exciting about this is it's almost probably the last sort of Lego brick to go into the facility and service. So whether it's investments, whether it's the planning, whether it's the loans and deposits, all of that now links together. So the family service all under one roof provided through their financial planner. I think that's very exciting.
I wouldn't say it's the last one. We've got a few more up our sleeve after that.
Typical. I always knew you had some other ideas. Thanks. Goodbye. And if you'd like any further information, we'd be delighted to talk to you, so do give us a call.